Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This we get everything you need to know in 90 seconds at 9 o'clock with news the relentless declines are building relentless economic problems. The next regional Fed manufacturing survey is from the Dallas Fed, and it paints a very pessimistic April picture and a record low at an index of minus 74. In February 2020, that index was in positive territory. Aircraft maker Boeing said it will need more capital to survive. Just 2 weeks ago, it said it had all it needed. And there is more evidence the American food distribution chain is unravelling as producers work to keep their employees safe with social distancing and much lower output. The new US $310 billion SME rescue package that is a top-up from the earlier one that was rorted by large businesses has been overwhelmed and its application system crashed under the load. In China, industrial profits at their large SOE companies fell 37% in March. This was a similar fall to February, and the extension into March when their virus emergency was coming under control indicates the long haul they're into to recover economically. Worse, China's banks are in trouble with increasing numbers requiring state bailouts. But it is the nature of those bailouts that seem to be adding to risks, not reducing them. In Europe, their aircraft maker Airbus also says it's in a fight to survive. Their main pullback is currently at a large UK facility. In Australia, maintaining profits was a major consideration for the Big Four banks as they weighed whether to reduce mortgage rates in line with the Reserve Bank of Australia's cash rate cuts during 2019. That's what their competition regulator has found. In equity markets, the S&P 500 is up 1.3% in afternoon trade today. That comes after a much more enthusiastic rally in Europe, with most markets there up more than 2.5% overnight. Yesterday, key Asian markets were mixed, with Shanghai up just 0.03%, Hong Kong up 1.9%, and Tokyo leading the way up 2.7% on the day. US Treasury 10-year yield is firmer today, up by 4 basis points at just under 0.65%. Gold is down $18 to $1,712 an ounce. And oil prices have fallen sharply again today. They're now currently at just under $13.50 a barrel, a dive of $3.50 a barrel. International oil prices are down too, with the Brent benchmark just under $20 a barrel. The oil patch's woes are deepening with every day the market price is below the cost of extraction. And previously we'd noted that lower prices undermine renewables investment, but actually the big loser here is coal, which is an industry that may never recover. The Kiwi dollar has firmed overnight against the greenback at now 60.5 US cents. On the cross rates it's a different story, however. We're down to 93.7 Australian cents, that's a 5-month low. Against the euro we're up to 55.9 euro cents, and while that is not a big move overnight, it is now a 2-week high. That means our trade-weighted index is at 66.6 and above its 4-week average. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.